Welcome back to the channel for another video. Be sure to like and subscribe, and let's get right into it. Today we're going to talk about how to manage a trade, or at least the entire process of from taking a trade to when you're entering it, and then after the end result, whether you close it out, hit take profit, hit stop loss, whatever you did. You guys can just ignore all this accurate analysis that we have. It's stuff that we just call it in the Market Mentors Discord every day with our different analysis, our new positions and winning trades we take. So just feel free to click the link in the description to join, and yeah, we'll see you there. So getting back to it, the first thing, let's just talk about whenever you're managing a trade. I'll type it out here. You want to always make sure your risk is defined before you enter a trade. So whatever that means, that could be, depending on what asset you trade, that's the various things like the the correct lot size, the correct amount of contracts, or whatever correct amount of units you're trading based on the asset you're trading. You want to make sure that parameter is set in stone before you take the trade. You don't want to rush into a trade and have the wrong lot size or risk the wrong amount, and then you end up losing, and then it just blows your account, or you take a huge loss, like 30%, 40%, 50% of your account. So you want to make sure that you're taking the correct time to calculate the right size unit or position you're taking, and then you want to make sure you're entering in correctly and verifying it's correct before you take the trade, and then you want to make sure you're doing it at the appropriate rate and not just doing something incorrect. So that's the first thing in managing a trade, just making sure you're doing things according to your plan. The next thing you want to do is something I talked about in a previous video, but you probably want to verify your price levels of the trade you're looking at, and at least I'll say different brokers, but I would say personally at least 3 different brokers. So I'm looking at, for instance, this is the Awanda chart. I would also mark up this analysis in the Skilling chart or a Capital.com chart or some other chart or broker you would use to trade on. I would compare the price levels and look at the price action to see what the candles are doing, because unfortunately the varying charts, they show different things. So you might have one chart that shows some sort of price action like an imbalance or a liquidity sweep, and a different broker might not show that. Or you might have a trade where one broker hits take profit and one doesn't. So you need to kind of consolidate between those different brokers, and that's how you can help save yourself some profit and secure some profit. Like I talked about in one of my last videos, I had a trade where it hit take profit in one broker that I was analyzing on, but it didn't hit take profit in my actual broker, but the one I was trading on. So I ended up just closing it out, and that was the right choice, because it wasn't ever going to hit take profit in my broker due to like spreads and just varying price levels. Then it ended up reversing. So if I didn't close it out and secure the profit and check the other broker, I would have had a valid loss there, even though it should have been a win. So just verifying your price levels in different brokers. I would say at least try to consolidate between 3. So just mark up, have 3 different brokers or charts you'd want to compare prices to, and just take the sign that at least one of them gives you. The next thing is, one thing you do to manage your trades is, if you're up a significant amount of profit, or you have a certain strategy or rule you try to do, you can move your stop loss to break even. And some of these are not necessarily suggestions. They're just kind of concepts to kind of put out there for some of you guys who are trading and trying to figure it, refine your system, try to figure things out. I'm just want to throw out some concepts for you that you can do to help boost and maximize your profitability. So if you're up like a certain amount of money or a certain amount of percentage based on whatever you're trading, and you're thinking, okay, this is a lot of money, I don't want to close out because it's almost close to take profit, but I want to just make sure I'm not losing a trade, just consider moving your stop loss to break even. That way the trade is essentially risk-free. Now, of course, that does come with risk. Like, at least you're going risk-free, and you're not going to necessarily lose any money. But you could also just put your stop loss up higher for it to be easier to be tagged, as opposed to if you just left it there at the bottom wherever your stop loss originally was. Then it could have just had some more room to play around and then go to take profit. So you can have a trade that's near take profit, go to break even, and hit your stop loss whenever you move your stop loss to break even, and then it reverse and hit take profit. So it's just something to consider, test out, see how you like it. But it is something that can easily put your nerves at ease whenever you're taking a trade, just knowing that you're risk-free and you're not going to lose any money. Another thing you can do on top of something similar to moving to break even or setting your stop loss at break even is you can set a trailing stop loss. Let's just call it a trailing stop. It kind of depends on the broker you have. I don't think you can do it on certain brokers. At least I don't remember doing it mobily on certain brokers. But I know the broker that I have, it's very easy to set a trailing stop. You actually might need the desktop application for any broker you're using to set a trailing stop. So in theory, what a trailing stop is, let's just say you have a buy and you're just buying up here. Actually, I'll mark it out of path. So you're just buying and you're in, let's say we're still doing Forex. So we're up like 70 pips and you want to set a trailing stop because you're saying, okay, I'm at 70 pips right here and I don't want price to close below here. And this is about 50 pips of profit right here. And I really like 50 pips of profit, so I want to do that. So you say, okay, I'll set a trailing stop from this point on that no matter what, I'll at least have 50 pips of profit. So you set like a 20 pip trailing stop loss. So that means at 70 pips here, price would have to go down 20 pips for you to lose your profit. So you want to say, okay, I'll have at least 50 pips minimum of profit. What you can do then is, or how price would react then is once it keeps going up, just higher and higher, it keeps going up in the 20 stop loss or 20 pip stop loss increment. So in this instance, if you had now when it shot up to 80, it'd be 60 pips for your stop loss. That's where your stop loss would be at. If you wanted to go up to, if it went up to 100, then it would be an 80 pip stop loss. Then once it finally reversed and came down, hit your stop loss, you'd be at 80 pips. But it kind of trails and it keeps going up whenever whatever increment you set from the price level. So that's another thing you can test out and try. I personally don't do it. I have tried it before. It's a good thing to do. It's an interesting concept. It's just sometimes price can be so volatile in how it moves. It really just depends on what asset you trade and what your strategy is. I wouldn't recommend it for shorter time frame trading, probably like I trade in the 1 minute. It's probably better in those higher time frame swinging moves that you're just securing that profit as you go along, so it wouldn't be too much volatility, and you probably want to trade a slower asset or a steadier asset that doesn't wick a lot. So that's one other concept I would like to throw out there. Another one that's highly recommended by a lot of traders, especially the consistent and profitable ones, is just taking partials. So a lot of people highly recommend just taking partials whenever you can because you don't know when the market's going to do whatever it's going to do. But taking partials is something that it does limit your profit, but it also decreases your risk. It just kind of, it depends on your own system and how your strategy and how your trades go, if the numbers are working on your favor. That's something that you can join Market Mentors so we can teach you about. But everyone can't really take partials. It just kind of depends on what your strategy actually is. So when you take partials, that's essentially just taking out part of your position, right? Let's just say we have another example here. You pop a lot size of 0.10 for the lot size. Your trade is halfway through to hitting take profit. You say, okay, I like this. I just want to take out some of this profit, and so I can make sure half it's secured. So let's say you take out half the profit. Then you'll take out half, and you'll take out 0.05% of that position. So now you only have 0.05% lot size trailing or running to hit your take profit or hit stop loss, and you've already secured half your position. So in theory, it's a really good concept because you can always secure your money however you'd like to do. Of course, it's better when you have a larger account. You can do multiple lot sizes and you can play around with those type of features, but it's not always the correct thing to do is to take partials because it kind of just depends on the numbers you have with your system with things like risk to reward, your win percentage, and how you set your targets and the actual amount you're risking. There's a lot of numbers behind it that go into determining if you can actually even take partials and if it's beneficial to you. Because it could be your win percentage is a little too low according to your risk to reward for you to even try to take partials. That could just be a detriment to you as opposed to actually giving you extra profit you're thinking you're getting. So the next one would be, of course, this is part of the managing, journaling while you're in the trade. I always recommend journaling. Like the second you start seeing the trade form, I would start journaling, writing down what you're seeing, what you're feeling, and then once you actually get in the trade, just journaling what you're feeling. If it's a rapid, fast-paced trade and your emotions all over the place, try to jot that down. That helps you manage the trade and your thought process. For if not that trade, then at least the next trade when you go back and review it and see, okay, why did I think this, or this steps we're going to go through? Why was I feeling this? Is it because you rushed your analysis, you missed a step in your checklist, or is it because you risked too much? Those things will help you in managing future trades, if not the current one you're in, and just give you that extra confidence to see things. Or it could just you could write down some ideas you're looking at, like okay, if this trade goes through in a certain amount of profit, and I see this type of pattern form, I can take a continuation trade. And then there could be other things that I'm going to touch on that'll follow up with this. So it's important to also always journal while you're trading. Journal before, during, and after. That's always helpful, and it helps you just get better and be consistent. And I actually mentioned my next point. One thing you can do when trying to maximize your profitability, just depending on your strategy, is watch for continuation moves. I know there are times when, let's say your emotions aren't in check and your psychology's not in check, that you might just, set the trade and you might just have to step away from it, walk away from it because you don't want to watch it. or you're scared to see things and you're just having a tough time managing it. But it's important to watch for those continuation moves, because that could be something that helps you maximize your profit, because you could have one day where you have one big trade, but it might have the one or two continuation moves, and that could be 3 easy wins for you. Or it could just be one win where the continuation might win and the original trade might lose, and that might be helping you to have a profitable or a break-even day. So it's important to try to take all the valid trades. So you need to really watch for those continuations if your strategy allows it or has that in the strategy. And that'll just help you manage that trade and really just optimize the moves that you're taking. Watch for continuations if you have that in your strategy. And another thing I would say is that I just kind of mentioned, or was going to mention, another model to watch for when you're journaling is watch for hedge moves. I have a video talking about that in the psychology of taking a hedge. But watch for hedge moves. Basically, you're taking the opposite of what you're anticipating. So earlier, I know I was looking for a potential hedge move if I took a buy here and that buy ended up winning. But if it ended up breaking that to the downside and it's having certain confluences that I've talked about in my previous videos, then I was going to look to sell it and have a short and easily target these lows probably. But I was looking for a quick short move if my buy didn't go through. The buy went through in this candle here. So that's what I was looking for. And it's important to just keep an open mind when you're trading. You want to be very flexible. So you want to make sure you're looking out for a potential hedge if your strategy allows it. If you don't have a strategy for hedging, then don't do it. But if you do, you can manage a trade by trying to secure profit if the market goes one way or the other, or at least breaking even or making a slight profit. So just watch for those hedges if you can, if your strategy allows for it. And then I would say probably the last tip, released for this video, because I don't want it to be too long, is make sure all your positions are closed when the trade is over. You might be one of those traders that you just take position, enter in with a certain amount of lot sizes, you enter in with a stop loss, and then you just don't close all the trades. You might be taking multiple positions, and you might just say, okay, I'm closing out one position here, I'm satisfied with the profit, but you forgot to close out the other ones, or you took partials and then you forgot to close it out because you realized it didn't hit your TP, or if you're just doing different things like I said, taking multiple positions, you just want to make sure that you're always fully out of the trade whenever the trade idea is over, or if you didn't set a stop loss. There are traders that don't set stop loss and they kind of try to gauge when they're going to get out. I don't recommend that, but you just want to make sure all your positions are closed. And let's say if you have to step away from the charts and you want to make sure you have your parameters set, like your stop loss and take profit set, because you don't want it to just run on you while you're stepping away or doing something else. You're preoccupied or distracted. You just don't want it to run away on you and then just blow your account because you weren't paying attention to something. So you just want to make sure that all your positions are closed whenever your trade idea is over, just so you can preserve your capital and move on to the next trade. So with that, I'll probably wrap it up here. Be sure to like and subscribe. Check out that this probably is going to be a sell, little sneak peek for a move here. This trade is probably going to be a sell, FOMC, and the Fed press conference is dropping right now. Definitely was a buy move here to these candles that you could have caught, but I'm definitely looking for this sell here next. It's looking like it's about to be tapped. Like I said, this is a valid, extremely accurate analysis that we're giving out in Market Mentors, showing that again. So be sure to like and subscribe, and I'll see you guys in the next video.